materiality will be determined by the auditor based upon his professional judgment. So it is not his right, but he knows very well to have this financial statement in accordance with applicable financial reporting framework. He is the person, is the best person to say, based on his professional judgment, he will determine whether this particular item is material to the financial statement or not. So materiality in simple terms, it's called significance. Okay. Now we will just carry on from this 3261 materiality for the financial statement as a whole. There could be materiality even for a single financial item also. Now we are focusing on materiality for the financial statement as a whole. Now in auditing chapter, we cannot study a particular topic in isolation. So we need to attach some other terminology and definition to that so that we will understand as a whole. Like this, or the financial statement as a whole, auditing also we can understand as a whole by attaching certain other definitions during when we are addressing certain topics. Okay. So audit risk. So as we all know, what are all the audit risks? They are inherent risk, control risk, and detection risk. These are all the audit risk. Now, audit risk is the risk that the auditor may unknowingly fail to appropriately modify his or her opinion on financial statements that are materially misstated. So that is what it is mentioned, just not misstated. It is materially misstated. There could be some immaterial misstatement that can be ignored. So the importance should be given to the materiality right from the beginning of auditing till the end. That materiality is a very important point. So an audit risk is a risk that an auditor may unknowingly, not knowingly, unknowingly fail to appropriately modify. Why he is going to modify? Because the material, the misstatement is, the financial statement is material. The material misstatement meaning the financial statements are indicated in a way that the financial statements have missed certain things or has got certain misstatements due to error of risk or fraud. That could be material to the whole financial statement. That could impact the financial statement of an organization. That is what is called materiality, missing certain things or giving certain thing in a different way. When an auditor is going to do an auditing, he is going to really find out whether that particular misstatement is material to the financial statement. So unknowingly fail to appropriately modify. If an auditor identifies certain misstatement and if he fails to modify that particular financial statement, even after knowing that it is having a misstatement, that is called as an audit risk, because auditor is going to give a wrong opinion. He is not going to modify his opinion based on such misstatement. So audit risk is the risk that the auditor may unknowingly fail to appropriately modify his or own opinion where it should have been modified and where he is not going to modify. So this is one of the audit risk, because he is not going to find out that particular material misstatement on financial statements that are materially misstated. Okay. The audit risk can also be defined as a function of the risk that the financial statements prepared by management are materially misstated and the auditor may not detect that material misstatement. Number one is where he is going to wrongly not modify his opinion. Number two, he is not going to detect that particular misstatement which are materially misstated by the management. So when you see audit risk, means there are two things. One, the auditor is failing to appropriately fail to modify his opinion on such materially misstated financial statements. Number two is failing to detect, an auditor will fail to detect that particular material misstatement that is available in that particular financial statement. Okay. Because of the nature of the audit evidence and the characteristics of the fraud, the auditor is able to obtain reasonable. So we will be reading this, touching upon this particular point every now and then. Reasonable, because there is no absolute assurance, because reasonable assurance is the highest form of assurance that material misstatements are detected. So reasonable assurance is obtained when the auditor has sufficient appropriate audit evidence. Even here, who is the best judge to find out whether this particular audit evidence obtained are all sufficient? It's an auditor. So he is the best judge, and based on his professional judgment, he is going to take a call. Yes, the evidence what we got for this particular financial statement is perfect for me to make an opinion. So reasonable assurance is obtained when the auditor has sufficient appropriate audit evidence to reduce audit risk to an acceptably low level. As we already saw, the audit risk that the auditor has this time has really not failed, and he has already found out what are all the material misstatement, and he is going to appropriately modify his opinion. So thereby, if he is having appropriate evidence to reduce that particular audit risk to a acceptably low level, we are not going to totally remove or eradicate. It is going to reduce it to a lower level. So reasonable assurance is not an absolute level, and therefore it's not a guarantee that audit conducted in accordance with GAS will always detect a material misstatement when it exists. That could be certain misstatements that will not be detected, that will come under audit risk. That is what you need to know. Audit risk, based on the auditor, there are two things. One, where he is going to fail to modify an opinion. Number two, where he is going to fail to detect that such misstatement that was available in the financial statements. Number two, the auditor. So what is the bottom line is the materiality. We are not going to look into any immaterial misstatements that we can totally ignore. Then the auditor must consider audit risk and must determine a materiality level for the financial statement as a whole for the purpose of. You should only consider only those points that are materially going to affect the financial statement if the auditor is going to pass an audit opinion. So those significant items we need to concentrate. So the auditor must consider audit risk and must determine a materiality level for the financial statement as a whole for the purpose of what? Determining the extent and nature of risk assessment procedures, that is RAP. What we call as risk assessment procedures, we need to identify what are all the risks and who are all going to be affected by those risks, and what are all the ways and means to reduce such particular risk. These are all the areas what an auditor should consider. The auditor must consider audit risk and must determine a materiality level for the financial statement as a whole for the purpose of determining the extent and nature of RAP, risk assessment procedures. Then identifying and assessing the risk of material misstatement. Number one is he need to find out what are all the risks that could be available and carrying out certain risk assessment procedures. Then identifying the assessment of the risk of material misstatement. By being the material misstatement available in the statement, financial statement, what risk that is going to be there for the organization. Then determining the nature, timing, and extent of further audit procedures. After identifying that there could be certain material misstatement, what are all the audit procedures that an auditor has to perform, and at what time, the nature, timing, and extent of such audit procedures. Then evaluating whether the financial statement as a whole are presented fairly in all respects in conformity with AFRF, applicable financial reporting framework. This is a very important point. Right from the definition of auditing, we are looking into this particular terminology, AFRF, evaluating whether the financial statement as a whole are presented fairly in all material respects in conformity with AFRF, applicable financial reporting framework. In this case, it could be US GAAP. Then obtaining reasonable assurance about whether the consolidated financial statement as a whole are free from material misstatement, whether due to fraud or error. Even here, when we say free from, it is coupled with reasonable assurance. So highest form of assurance that they are free from material fraud or error, and there is no absolute here also. So for the purpose of, he has to determine the extent of RAP, risk assessment procedures, identifying, assess the RMM, then at what time, nature, timing, and extent of providing certain audit procedures, doing audit procedures, then whether the financial statements are in conformity with AFRF, then the reasonable assurance, obtaining reasonable assurance that the consolidated financial statements or the financial as a whole are free from material misstatement.